time to do business again. This time it's Business Incorporated, and we still have 55 minutes. Here's what we have prepared for you. On this episode of the program, we'll tell you some of the factors that cause delay in port clearance in Nigeria. Ghana is boasting of stable power supply. They're looking into the future. It should be green. Insurance in Kenya is getting regulatory authority attention. 20 brokers are being delisted. Welcome to the program. I'm Ini John Mekwa. Oil prices rose on Friday after European Union agreed to new sanctions against Russia, also underpinned by supply concerns following drone attacks in northern Iraqi oil fields and tight market fundamentals. Looking at the numbers, we see that Brent is up 0.89% at $70.14 a barrel. WTI is up more than that, 0.95%, and brings the price to $68.18 a barrel. The EU reached an agreement on 18 sanctions package against Russia over its war in Ukraine, with measures aimed at dealing further blows to Russia's oil and energy industries. Its latest sanctions package will lower G7's price cap for Russian crude oil to $47.06 per barrel, and 4 days of drone attacks on oil fields in Iraqi Kurdistan that shut down half the region's output. That has also supported prices, pushing both contracts up by $1 on Thursday. Additionally, seasonal travel demand has popped up market in the first 2 weeks of July. Global oil demand has averaged 105.2 million barrels per day, and that's up by 600,000 barrels from a year earlier, and largely in line with forecast, at least according to JP Morgan. And we'll see where this goes, talking about oil prices in the coming days. We're staying in the oil space, where Dangote has suspended its discount scheme for now. Emphasis on that, according to Dangote official. They suspended the ₦5 discount scheme with partners to enable them create another. They say this development comes after reports indicate that operations of a racket involving some of its affiliate marketers and strategic partners who have been diverting subsidized refined petroleum products for profit, prompting the suspension of the refinery's discounted fuel supply scheme. Investigations by the refinery had been rerouting the loaded trucks to unregistered third-party marketers. And so we hope to hear from Dangote soon on the update of that investigations. And of course, they promised that even though that ₦5 discount scheme has been suspended for now, there will be an introduction of another scheme that will close the loopholes that has given room to this racketeering. Now, the Nigerian National Petroleum Company Limited has slashed petrol pump price to 895 naira for a litre in Abuja and 865 naira in Lagos, following similar moves by Dangote Refinery, which cut its ex-depot price to 820 naira. This marks the second reduction in 2 weeks as competition heats up in the deregulated market. Some independent marketers are aligning with Dangote's pricing, while the NMDPRA is set to host a stakeholders forum next week to address pricing, transparency, and supply stability. Meanwhile, petrol prices have surged post-subsidy removal, averaging 1,239 naira for a litre in April, with unions proposing a price range of between 700 and 750 naira to reflect market realities. Let's leave the oil and gas and go to metals. Gold prices gained on Friday, but were on track for a weekly decline on easing concerns about the U.S. Federal Reserve's independence and strong U.S. data, while platinum rose to an 11-year high. That's not a very common one. But we see spot gold is up 0.3%. It's 3,349 naira 40 dollars, I beg your pardon, 49 cents per ounce. U.S. gold is down 0.3%. That brings it to $3,354 70 cents. Spot silver has gained more than 1%, $38.69 per ounce. Platinum is up 0.86% at $1,484.70. And there you have it, the big one now at this time. I don't know where it just came and got so much attention. It's up more than 3%, bringing the price up to 1,342 naira 50 kobo. This price here is an 11-year high, and you know, we know that the economic uncertainties also feed into this. Meanwhile, you see the U.S. data showing that retail sales rose more than expected in June. So even though inflation didn't come out looking so well in the United States, it does seem like other economic data are giving confidence to investors concerning how President Trump is handling the economy. While initial jobless claims were better than expected, bullion is viewed as a safe haven asset during times of uncertainty and performs well in a low interest rate environment, which is why President Trump is pushing Jerome Powell, you know, to cut interest rates. The Debt Management Office here in Nigeria says it successfully allotted a total of 4.27 billion naira for this month's federal government of Nigeria saving bonds. The amount marks a higher allotment when compared with the 4.01 billion naira recorded in its June auction. According to data published on DMO's official website, the bonds were offered between July 7 and July 11 this year. The 3-year bond maturing on July 16, 2028 was issued at 16.762% coupon rate, while 2-year bond due to mature July 16, 2027 was allotted 15.762% coupon rate. The FGN Savings Bonds Program, which was introduced by the DMO in 2017, has over the years become increasingly popular among Nigerians looking for safe and predictable investment option. Now to one of our top stories this afternoon. Human factor is a major reason for delay in clearing cargoes at the country's port. This is according to the Chief Executive Officer of International Trade Advisory Services Limited, Mr. Oke Ibeke. He was speaking earlier today on Business Morning. Mr. Ibeke recommends that the customs should look beyond the use of high technology to decongest the amount of containers at the port. Recently, the Nigeria Customs Service introduced measures like the 30-day clearance deadline and, you know, the Biodogu platform also to streamline processes and reduce delays.
But it's not all about high-tech. It's about human factor. Let me give you an example. We have import prohibition list, which government put in place to protect the local economy. We have tariffs government has put in place to protect local manufacturers, because fiscal policies is all about protecting local manufacturers to boost local production. But the issue is that people continue to breach it. They continue to breach it. So high-tech plays a role where compliance is high. It is where compliance is high. Because high-tech will not stop smugglers. It has to be physical. If you go to the ports, if there is 100 containers lined up for delivery, up to 60 of them have one breach or
Now let's talk about inclusive jobs and the future of work in Nigeria. We know that AI, well, with some Mr. Ibeke say it's not just about AI. You also need the humans. I think Glad even had a conversation on that. You cannot be smarter than your AI. Your AI can only be as smart as you are because it works with the data that you feed it with. But let's see the future of work here in Nigeria with head of partnerships at the African Talent Company, Mr. Ahmed Alaga, joins us virtually from Nairobi, Kenya. Mr. Alaga, good afternoon and welcome to the program.
Good afternoon. It's nice to be here with you.
Great. So just before we delve into that, let's have that slide. If my producer could give me that slide, talking about some of the findings of inclusive jobs by the Talent Africa. And then we see there the African Talent Company. They've found out some of those numbers there. 70% of employers in Nigeria want no, they're not very conscious of inclusive jobs. I guess we should start from there and ask, Mr. Laga, what do we define, what do we call inclusive jobs?
I think, when we think about it, I would like to start, from why the African Talent Company exists. Our mission basically is to close the talent gaps in Africa with homegrown solutions. And when you set out to achieve such an aim, you now get into the nitty-gritty of, what jobs exist, what are the available jobs, and some of the barriers that exist um, for young people and most marginalized young people that sort of create that barrier for jobs not to get to them as expected. I think for us, we always want to state the term dignified and fulfilling. And that's when you look at the nature of the job and if the job gives the individual, first of all, the minimum required income as the baseline to earn. It comes to a certain level of respect, a certain level of satisfaction, such that at the end of the day, that individual is able to pursue other aspects of their life, live a high quality of life when necessary.
Okay, so it's the result and the satisfaction from the job and not the type of job that makes it inclusive. Is that what you're saying?
Yeah, it's all part of it. Inclusivity is also a key part of it. Um, and what we've seen over time is that employers are not paying attention to inclusivity, especially for marginalized context. And when we say marginalized context, we're talking about women, people living with disability, and people from either refugee camps or internally displaced persons.
So I saw that your research also shows that most of those people, the category you just mentioned, are more involved in self-employment. Does that mean
Yeah.
that, that is missing in the normal formal jobs? They are not being considered, or is it that they are not qualified?
Yeah, the research shows that 9 out of 10 employers will not consider people living with disabilities, right? And because there's some stereotype around that and some myth around even hiring people with disabilities. I'll give you a good example. One of the respondents in the research said that um, she would love to apply for jobs, but when she applies for a job, um, she gets a phone call, but she is deaf, and so a lot of times, even if she puts in the application that this is my condition, but as I apply, can you consider this when you reach out to me? 10 out of 10 times, if she's successful with her CV or cover letter, most of the time she gets a phone call. And at that time, she's not able to respond to take on the opportunity because it shows a certain level of understanding from the employer side. So there is a huge struggle with employers actually catering to women, people living with disabilities, and people from refugee camps. It's a huge struggle. And if we really want to address the unemployment problem in Africa, which is a humongous challenge, we definitely can't leave out these groups. Because from what we understand, 10 years from now, we would have two options. We'll either have the largest workforce in the world because of our large youth teeming population, or the largest criminal force in the world because we've not taken into account what that large youth population can spill into. when it comes to gaining meaningful employment. So it is a struggle for this particular target audience, and that's why the research went deep into understanding what happens there, so that we can also help employers understand what areas they can actually come in to sort out challenges women and people from this target audiences
So
face actually.
I think you call that policy blind spot because on paper, we do have policies. We have policies that are supposed to be considerate to people with disability getting on buildings and parking. I know Lagos States, for instance, they have a ministry that seems to be really active, but you still say there's policy blind spots in dealing with this group of people.
Yeah. Yes, there is huge. And when we talk about policy, a lot of time is left on the document. Some states in Nigeria are really doing great. For instance, in Ogun State, where the ministry that caters to people living with disabilities, actually the director of that parastatal is held by somebody who is from that particular community. We've seen cases where that isn't the case. A good example in East Africa is, for instance, like in Nairobi, if you hire people with disability, the government gives you a tax rebate. So it means that as a policy, the more people living with disability you hire, the less the cost for you as an organization. So there's that actual incentive from paper to activation, which then also encourages employers in Kenya to hire more people with disability. So we have a lot of these policies on papers, but they haven't been implemented in a way that they are practical. Secondly, there's a disconnect in how it also benefits employers in most cases. So that is actually the work that I think that still needs to be done from the policy side to move that idea into action so that benefits to this particular, target audiences can reach their full potential.
Yeah, and I like the example you gave because I was just going to ask you about incentives. Because, actually, as an employer, if you employ a person with disability, there are more considerations for you to give, which may, obviously increase your operational costs. So I guess examples such as that, you gave a tax incentive or a tax rebate, could be an incentive for employers. But I don't think I've heard such conversation in Nigeria yet.
Yeah, there are some policies and conversation around that is almost similar, but the challenge is always at implementation and activation. And you have that particular issue when one particular part of the government decides to do certain things, but the other parts of the ecosystem that is supposed to support that policy are not fully onboarded, and therefore it dies in between. So a lot of the policies that you see live through are either a PPP or private sector led because there is a huge benefit for them. There are other policies that are working as well, and I'm giving kudos to that, but there's still a lot that needs to be done. However, we think that from the employer side of things, we're now beyond the era where the question of not knowing that this is what we need to do versus what we should be doing, because we should be now more informed. And this is something that the research can really help many organizations to understand.
So would you say that these are the group of people, the people with disability, and then we also talked about the women. Are these the people or the groups that you would say currently in Nigeria are being excluded when you talk about job inclusivity in the country?
Yeah, and we know this because for the past 5 years, courtesy of the Mastercard Foundation, we've been on a trail under the Young Africa Works program, to train roughly about 2.4 million young people in the last 5 years and place roughly about 6,000. And the cost of implementing that, we've actually seen, because the program is highly targeted to women, where we're expected to target about 70% women. And so from implementing that program, we've actually seen that there's a whole lot of social context to these particular target audiences when it comes to the job market. A good example is a lot of consideration given to men versus women, a conversation about equality in pay. There's also care as well. A good example is how many organizations today have like a daycare center for mothers who have come back to work, right? It's something that should be a given, right? But in most cases, these things don't exist. If we live in a world where more women are denied access into many of these sectors because of their agenda in most cases, we tend to see less development in that area. And studies have also shown that boards, organizations who have more women seated on their boards have done 14% better in revenue than organizations that don't have women on their boards. So the evidence are there. It's a question of us now deciding to say, how do we have more women into the system? How do we plan for women? And what we've seen so far as we work with marginalized contexts, once you plan for women, you technically plan for everybody. And that's what we've been doing for the last 5 years. So as we implement, provide training and support services to address unemployment challenges, provide employability training, we've seen that there's a huge need to constantly try to close the gap between what the margin is for what young men and women in the talent space is, or what opportunities can be given or made available for more young women to take upon as a job, or how do we create entrepreneurship opportunities for more women? Because we've also seen that in as much as we want to get a lot of people employed, we're also thinking about how can these young people and young women also employ themselves. Because if 80% of the employment opportunities exist in the informal sector, it means that there's a lot of energy that needs to go into ensuring that we can help more marginalized young people either start a business or gain some form of employment through numerous initiatives. And it's something that requires all hands on deck.
Yeah, obviously, all hands on deck. Thank you so much. Ahmed Alaga, Head of Partnerships with the African Talent Company. Thank you for your time and your views.
Thank you.
All right, let's take a break. When we come back, we'll head to the markets with Anita Edit. Please stay with us. Yeah, welcome back. It's still Business Incorporated here on Channels Television. Let's head to the markets now for intraday numbers with Anita Edit. Anita?
Thank God it's Friday, Ini, and of course, I don't know whether to say it's now becoming like much of expectation. Nigeria's stock market has hit another record. Just yesterday we entered the 130,000, and now if we can take a look at the screen there, it's almost nearing the 131,000 index level. New highs, 130,941.35. That's what I tracked it just about an hour ago, which is the intraday market numbers.
It's good news, and we hope, but we do know that there has to be a pullback. It's a natural phenomenon in the market.
Yeah, you call it
investors.
Correction.
Correction, pullback, profit taking. It has to happen.
Exactly.
So I mean, nobody should expect that it will just keep going this way.
But the NGX said, okay, that there's no fear that this inflating numbers of the NGX, because just last week we were talking about 120, 122, 124. So some might be of the fear that this market, more like a bubble that is increasing and increasing, that it might burst. But the NGX have allayed fears that that's not going to happen because all the fundamentals are there.
It's not just about the NGX allaying fears. We know when we had, the bubble bust the other time, you would notice that it was mostly foreign investors. But the market now, I think up to 80% or so, is made up of domestic investors. Now, domestic investors mostly are here. We ain't going nowhere. We are here. But with the foreign investors, the FPIs, once there's a news or a threat, I mean, they just take off their profit, to take off their money, and then they're out of there. That's one of the reasons we had what happened. So I think looking also at the numbers, apart from what the NGX says, would also give investors, a sense of certainty and direction, on where they could go.
And also to buttress that is that the reforms, because I asked one of the brokers and he said the reforms carried out by the central bank is one of the major factors that's propelling this market. And of course, many other announcements by the central bank. First, we had that forbearance guidelines, which at some point caused the market to make a pullback. But when the CBN made that clarity, banks have been lifting the market as well as some other key components of the market. Yesterday, we also saw the likes of FBNH, FBN Holdco, making an imprint.
I think the off-market share buy or whatever you call it.
Yeah,
that's also,
exactly.
Not considering the names involved.
Not considering those names.
Exactly.
Yeah, quite.
I mean, that's
and
also,
FBNH
that was
of course
exciting to investors.
That's the number one way you want to talk about fugas. That's the first letter in that in those top tier banks that the 5 of the top tier banks that we always mention. And of course, you'll be giving that stock market report later today.
Yeah.
Okay, so now let's head straight to business with the stock market trading at intraday. Like we were talking about, the Africa's best performing stock market, which has outpaced the MSCI emerging markets across Europe, Middle East, and Africa. And just the gains that the market has gained so far, 26.58%, which is that's quite impressive and outpaced these markets that I've talked about. Africa's stock market, best performing stock market is Nigeria's stock market, just as we speak, and it's just about 161 days or less to the end of the year. And of course, when we look at this number, remember we mentioned it here that we're looking out for the market to hit a 150,000 index level, and that's not too far away because we have just about 5 months or less to the end of the year, and this market, that number is still far away from that 150, not too far away from that index that we're projecting. Of course, the market may have a mind of its own, but correction territory, gains, losses, but that market might just hit that number, and we're just counting down and looking out with optimism for that to come into fruition. Now, leaving Nigeria's stock market, we talk about the Johannesburg Stock Exchange, which is also climbing. Yesterday, we saw it dropping to about a little less than 98,000, but now it has climbed well into the 90,000 points and climbing, almost following Nigeria's stock market, about to hit that 100,000 index level. Was up by more than 1%, 1.50% at intraday. And for the other two markets, we have it that the greens have it for the markets for Friday's intraday session. Let's take a look at this. Is for Nairobi Stock Exchange All-Share Index. Thursday closed 0.12% up, 157.179, and about to enter the 160,000 index level. While the EGX 33,821.03, more than 1% gain at intraday. So all the markets across the world, even we also have it that in the Middle East, that the Israeli stock market, in spite of the wars that is fighting on one side with Hamas and other of its neighbors within that region, Israel's stock market is also doing very well. So it's kind of a stellar performance for all the markets within the era of tariffs announced by U.S. President Donald Trump. But we take a look at, we'll find out how all the markets will be ending this quarter and the rest of the year. So now let's move over to the financial markets as well as the equities markets review for this week. It has been just 4 trading sessions this week. Remember that on Tuesday, the markets was closed in honor of Nigeria's former President General Muhammadu Buhari, who passed away. That was on Sunday. So the markets was closed on Sunday. But nevertheless, the market still had some impressive activities. We had, first of all, the Naira hitting a 4-month high. We had the inflation numbers being released. We also had we also had the milestones, 3 milestones recorded this week, which is almost adding to what we had last week. We had 3 milestones last week, 3 milestones this week. So it's been a week of milestones for Nigeria's equities market. So we'll talk more about that and other factors or issues or developments within the fixed income space. And we have Nabila Mohammed, financial market analyst with Chapel Hill Denham, to give us details of that and what to expect in the coming week. Thank you for joining us, Nabila.
Thank you for having me. Good afternoon.
Okay, so now let's talk first about FBN Holding Company, where influential businessman, business mogul, activist, investor, as well as, well, we might even call him an author because he's about to launch his book. We're talking about Mr. Femi Otedola, who is a chairman of 2 listed companies, Geregu Power and FBN Holding Company. He's also the majority shareholder there. So now let's talk about that holding company. How was the impact being felt following his acquisition of 36.7% equity in that listed company?
So to start with, since last year when he started to consolidate his holdings in the company, it's not a surprise to us that we definitely see him want to do more with in the subsequent years. And that's exactly what happened this week. He just consolidated his ownership of that particular bank, that First Bank, and we would expect that with this new ownership in charge, they are going to make sure that in terms of running the business or the affairs of the entire financial institution, it will be very, very optimal. So we are just looking forward to the years of his reign, the subsequent years of his reign, and how he plays this particular ownership in terms of managing the affairs of the entire holding company.
Okay, so now, Nabila, we've talked about Mr. Femi Otedola, but let's get to the deeper side of the market. 130, almost 131,000. Just yesterday it crossed the 130. The previous day it crossed into 128. Now, several factors have been listed as being behind the stock exchanges all-share index going into record milestone never been seen before. Now, what can you pinpoint or attribute to this stellar performance of the market within the first 2 weeks of July?
So I would attribute it to a number of factors. This is the period where we start to see earnings being released. And we all know how there is this expectation that across board earnings will be strong, especially for the non-financials, given that they are coming from a low base and how they poorly performed last year as a result of the FX exposures that they had in their books and all that came with it. So there is that expectation that they are going to do well. Q1 was already a premise for that because we saw most of these consumer names return to profits. I'm going to give examples like of International Breweries that hasn't even recorded profits in the longest time. But in Q1 2025, it did so. And this is just one out of so many others, likes of Nigerian Breweries, likes of Cadbury, likes of Nestle, just to mention a few. They are going to deliver stronger numbers because if you look at exchange rate over the period, it has been relatively stable. As we mentioned when you were giving your opening, we've recording new highs lately in terms of how our exchange rate has performed, and that is positive for them. Overall, this week has actually been good because we saw inflation number also come out with a sustained disinflation for the month of June at 22.22%. That is also something that tells that things are looking good currently. And investors just want to take position right now and not necessarily wait till when their expectations materialize. So it will be too late then for them to reap the benefits of the gains that the market will come with, given the results that are going to be positive. Now, if we're looking at the financials, we already know that as well they are going to give strong numbers. Even when the forbearance news came out, the CBN did come to clarify how they intend to support the banks out of this space. And so most of these banks made disclosures explaining how they intend to exit. Most of them say they will exit by H1 2025. And this just gave some form of respite in the minds of investors that these banks are indeed making strides to come out of this particular forbearance regime. They are well known for paying dividends. Investors also want dividend returns. And most of the ones that pay interim dividends are also going to do so if they are able to exit the forbearance regime. Let's not forget, some of these financial institutions are holding companies. If the bank itself cannot pay, they would definitely get, investors will definitely get payments in form of dividends from their other holding company structures, the other vertical businesses within the holding company structure. So it's really just a good time. But again, in as much as it's a good time, there's always going to be a time when the market will slow down in terms of the value that we're seeing. But overall, the factors that are fueling this performance have the fact that there's expectation for strong earnings across board. Inflation came out at a lower print for the month of June, and people are just taking positions ahead of dividend announcements and dividend payments. You may even see some surprises. I don't do that out either.
Nabila, I know you're hungry to give us much more details, but of course, time is never your friend. But I know that next week, the MPC will be meeting, and of course, inflation, the lower inflation rate is a factor to consider, as well as the FGM bond auction coming up most likely on Monday, if fingers crossed. But we thank you so much for your time, and we look forward to seeing you on the show in time to come.
Thank you for having me.
That was Nabila Mohammed, equity financial market analyst with Chapel Hill Denham. Okay, let's see how the Middle East markets are performing. For the Dubai and the Abu Dhabi index, is more of a mixed performance there. At first, we saw the Dubai index being in the green, but made some retreat there. The Abu Dhabi still holding on to the green, 10,261.59. But for the markets in Saudi Arabia and the Qatari Stock Exchange, both of them were in the red, and no thanks to the impacts of profit taking there. And speaking of the markets in Saudi Arabia, if you can have that, we have it that the Saudi Aramco says it is reportedly close to securing a $10 billion investment for its Jafurah gas project from a BlackRock-led group. So that investment will likely focus on state-owned petroleum and natural gas company projects, infrastructure, including pipelines and gas processing plant. So that's it for the Tadawul, the Saudi Arabia's stock market, with, of course, which is the state-owned company, oil company. So, I would have given you details of other markets, but time is never your friend.
Time is not your friend, Anita. Thank you so much.
Pleasure.
All right, we're still in the market now, but let's head to Europe and find out how investors are reacting there at this time. In Berlin, we have Emily Leshner joins us. Hi, Emily. Good afternoon. Which way are investors looking at this time?
Good afternoon, Eni. Well, European shares rose this morning. That includes the German DAX, the Pan-European Stock 600, and the British FTSE 100. They all made gains. The FTSE 100 hit record highs this week and has gained nearly 10% this year. So it appears that Britain's stock market is finally reversing years of underperformance against the rest of Europe, and that's likely due to the UK-US trade deal. And that's why investors are also keeping an eye on corporate earnings for clues on the impact of U.S. tariff policies on businesses in some of the other countries that have yet to negotiate a tariff deal with the Trump administration. And finally, they'll be likely watching Swedish manufacturer SKF. That's the world's largest maker of ball bearings, which announced it will be cutting 1,700 jobs in Europe after experiencing a 10% drop in sales during the second quarter this year.
Yeah, talking about agreements, we hear this historic one, a treaty that has been signed between Germany and the UK, and I believe this is the first since the UK left, Brexit that is. Can you tell us more about this, what to expect, and what does it entail, really?
Yeah, well, this treaty does a lot of things. It promises a lot of things. One of them is that it aims to strengthen defense and security for both countries and to ensure military readiness as well. So, for example, Germany and the UK are now vowing to work together to secure international orders for defense equipment that they co-produce. That includes a type of fighter jet as well as an armored vehicle. And a German defense tech company is going to open a factory in the UK. They're promising about 100 jobs, and that's just one of 230 million euros worth of commercial investments that Germany is now promising the UK. There's also a plan for a business government forum, which the countries hope will foster investment. There's an agreement. The agreement also pledges a new direct rail connection between the UK and Germany in hopes that it'll help deepen economic and cultural ties. And Germany also says it's going to help the UK deter undocumented migrants from entering. One of the ways it intends to do this is to make it illegal in Germany to be involved in facilitating illegal immigration operations. So there are also plans for increased cultural and social exchanges. For example, schools might not have to get visas for student groups coming over, and frequent travelers between the two countries might be able to pass freely as early as next month. So it encompasses a lot. It includes defense, immigration, economic, and social exchange.
Sounds very interesting, Emily, and as early as next month. That's really walking on your feet. Sounds good. But what's the impetus for this? Because I mean, Germany and UK, you've always had a friendly relationship.
They have, but there's definitely a sense, a general feeling among European leaders that this is a time they really need to band together to show a united front and cooperate. That's since Russia's invasion of Ukraine and since President Trump has taken office a second time. They just don't feel like they can rely on the U.S. anymore. Germany and the UK, they had already signed agreements allowing them to coordinate military training and military training exercises and fight cybersecurity threats together. And France, Germany, and the UK all went to Kyiv in the first week of Friedrich Merz's chancellery here in Germany. So European strength in the face of Russian aggression is a major factor. There's also an economic impetus as well. I mean, many economists agree that Brexit was pretty devastating for trade and investment ties for the two countries. In 2016, the year of the Brexit referendum, the UK was Germany's third most important export market. But by 2022, Germany had slipped to 8th place. The UK, meanwhile, had slipped from 5th to 11th place. Brexit meant less investment, fewer German companies working in the UK, so that's something that this agreement definitely tries to tackle. It tries to fill in some of the losses that the UK and Germany both experienced over the last decade. So they do have a friendly agreement, but this agreement signals that they feel like there's plenty of room for improvement.
Yeah, and it does sound rich from what you've outlined there. Thank you so much, Emily, and do have a great weekend.
Thank you, you as well.
All right, now let's come back to Africa, see what's happening. We start from Ghana, where Ghanaians are enjoying a stable and dependable power supply. That's thanks to significant ongoing reforms in the energy sector, according to the Minister for Energy and Green Transition, John Abdullahi Jinapor. Taking his turn at the Government Accountability Series, Mr. Jinapor states that there's been a significant turnaround from the persistent and erratic power outages experienced earlier in the year. Looking ahead, he says that they're unveiling plans for a 5-year strategic document that's aimed at accelerating Ghana's renewable energy and green transition agenda. We're still in Ghana. The International Monetary Fund has approved $367 million disbursement to that country after completing the 4th review of its extended credit facility program. And this brings a total support of $2.3 billion from IMF to Ghana. The economy outperformed forecasts in 2024 and the first quarter of this year, led by growth in mining, agriculture, ICT, construction, and the rest of it. And still in Ghana, following their emergency MPC meeting, we told you about that yesterday, the Bank of Ghana's governor, Dr. Johnson Asiama, has hinted at a potential cuts to the monetary policy rate as key economic indicators continue to improve. They were speaking at that meeting. That's the 125th MPC meeting. He cited 6 straight months of falling inflation. Is now down to 13.7% in June from 23.8% in December 2024. And then we leave Ghana and head to the east. Kenya. Kenya is set to introduce digital trade policy reform. The Ministry of Investment, Trade and Industry is leading that initiative, and they say they're seeking to introduce a compulsory digital ID to facilitate identity verification and authentication in online commercial transactions in the country. Yesterday, they also told us about a digital identity. So Kenya seems to be going that path now. And then still in Kenya, there's insurance regulation. The Insurance Regulatory Authority, they've deregistered 20 insurance brokers. They published a notice to insurance customers and the public warning against doing business with those brokers. The regulators revealed that the select entities ceased transaction insurance business with effect from June 2025. The IRA said that the deregistration of 20 brokers was done in accordance with Section 196A of the Insurance Act. And the Act provides for the termination of an insurer's authorization to conduct insurance business in Kenya. And the section also ensures transparency and accountability through a formal notification process. Uganda's foreign exchange reserves rose by about a third over the past year after what a central bank official described as direct purchases by the bank following healthy forex inflows from commodity exports and offshore sales of government bonds. The gross reserves stood at $4.3 billion in June, equivalent to 3.8 months of import cover, and up from $3.2 billion a year earlier. The Finance Ministry's permanent secretary, who shared this, says that the central bank's director for financial markets, that the bank had bought close to $2.2 billion from the foreign exchange market from July 2024 to June 2025 to boost the reserves. Uganda's economy has recorded strong growth in recent years, supported by oil sector investment and infrastructure spending, but rising government debts and servicing those debts the cost is threatening the sustainability of public finance. The UK and South Africa have signed a new agreement that's aimed at improving infrastructure delivery and optimizing state-owned property use in South Africa. The deal was signed in Durban by UK Chancellor Rachel Reeves and SA Public Works Minister Dean Macpherson during the G20 Finance Leaders meeting. UK Chancellor Rachel Reeves says that the partnership will drive economic growth, job creation, and productivity in both countries, while strengthening UK-SA business ties and deepening bilateral cooperation. And still in South Africa, the South African Airways has reported a 352 million rand loss for the year ending March 2025, and that's despite a 23% revenue increase to 7 billion rand. The loss follows the 210 million rand profit the previous year. Soaring fuel prices, that's up 46% to 1.9 billion rand, and a 30% rise in aircraft listing costs drove the decline, alongside 415 million rand in forex losses due to rand volatility. Delayed aircraft deliveries also hurt earnings, with EBITDA falling from 436 million rand in 2024 to negative of 90 million rand in 2025. Despite the loss, South Africa Airways maintains a strong cash position of 1.4 billion rand and zero debts and 6.4 billion in equity. The airline previously received 50.7 billion rand in state bailouts. All right, let's see what's happening in the world of crypto. I guess the biggest news now is that US President Donald Trump signing the country's first major cryptocurrency legislation into law marks a major milestone for the once fringe industry. Cryptocurrency getting prominence at this time. Let's talk to Solomon Amunde now about what he thinks and what the crypto community is talking about this. Hi, I'm Solomon. Good afternoon and welcome to the program. Hello, Solomon. Can you hear me?
Good afternoon, Ini. Good afternoon, Ini.
Yeah. So I know the crypto community, you guys should be popping champagne or something at this time with this signing of the crypto law.
I lost you briefly there. You said something about the crypto law.
Yes. I was asking what the reaction in the crypto community is.
Yeah, the entire crypto community is extremely excited after after the Senate pushed the bill for the Genius Act, which is supposed to be a stable coin law. And all that's left now is for President Trump to sign it, which we're 100% certain that he's going to sign it. So that's actually progress, lots of progress. What they're actually waiting for next now is the next bill, which he will sign into law that would govern the entire crypto space, which they termed the Clarity Act. So we're still waiting for that. Yeah.
So maybe you should tell us what difference this will make to, the crypto space for traders, for investors, for even critics.
Okay, so it shows that the president 100% supports the crypto ecosystem, and this would also mean a lot for investors. We all know that the world biggest investors are in America. So imagine the level of capital and liquidity that would find its way to the crypto ecosystem. This will also be like a direct endorsement from the government of the United States of America that crypto is an asset class that people should get involved in. So at that point, or at this point that we're in right now, other countries will rally behind them doing like a similar thing. So first of all, they have approved stable coins. We'll see more and more platforms now begin to accept stable coins as a means of payment for services, including the likes of like DSTV, like almost every service, even telecom providers like MTN, Airtel, and the rest. They will start accepting stuff like this, and it will be 100% legal. So that's like some of the ways that the crypto ecosystem will benefit from this. And also other tech platforms too will begin to incorporate crypto technology into their whole infrastructure and services.
So it does seem like the reality of fiat having a competition is becoming closer and closer. The US goes through with this, as you noted, and the talk of stable coin, it's really becoming closer, yeah?
Yeah, it's closer, but at the same time, I think one of the biggest things here would be the fact that in a very short period of time, we would start seeing banks, traditional banks begin to support cryptocurrencies, not just people buying it, but people holding it within the bank application. So imagine maybe Stanbic or UB or any of the Nigerian banks, and you go into the app and you can be able to transact your stable coins there, or you can be able to store your cryptocurrencies, the supported ones, within their app. So I think that's something that we should brace ourselves for. We would obviously see that happening soon. Yeah.
So, but does that take away you being your banker? Does that reduce that need?
No, it doesn't at all, because crypto gives the opportunity to be anything you want to be. So some persons don't want self-custody. Some persons are reckless and careless with self-custody. Some persons don't even need self-custody. They don't have the background for self-custody. So they need to make use of third-party applications. So not everyone wants self-custody, but for those that want it, they can also do that.
All right, Solomon. As you said, let's keep our ears close to the ground, especially the one of stable coins. I've heard a lot of conversations about stable coin already being used even by small businesses in Nigeria. So I guess the new era is here. Let's just brace up for it.
Yeah, we're already here.
All right, thank you, Solomon Amunde.
Thank you very much.
All right, other stories in the crypto space. Billy Marcos, a software engineer who created the iconic meme currency Dogecoin in collaboration with Jackson Palmer, has issued a major warning about a potential crypto crash. And he also published, that's revealed a list of his favorite cryptocurrency. Doge, of course, is part of it. And Marcos is known on X and other social media platforms under the pseudo named Shibetoshi Nakamoto, which is jesting reference to the Bitcoin creator. And then another story there is global cryptocurrency market capitalization has surpassed $4 trillion for the first time, driven by rallies in altcoins such as XRP and Ethereum. I know some people who made some money from Ethereum this period. Investors are rotating out of Bitcoin. So the gain seems to be spreading not just on Bitcoin, but also on others. So these are the major headlines from crypto. But I mean, I guess the crypto community would say this has been a fruitful and a very beneficial crypto week, coming from the US and spreading to other parts of the world. It seems to be a new era. Conversation of stable coins and even Bitcoin being adopted is spreading everywhere and looking to be our new reality. Time will tell. But that's it on the program. Thank you so much for being a part of Business Incorporated. Good to always have you there. And we'll do the rounds again from next week. But I'll see you tonight. I'm so happy because I think I'm going to record the sound of a very big ball at the close of trade today. I'm John Merkel. I'll see you later.